Okay, good morning here. I do want to do a sound check, so please let me know in the comment section that you can hear me if you can hear me. Hear me? Okay, good. Thank you. All right, let's get started. So first, I'm going to start with the earnings edge. What's going on with that? Uh, if you recall, I made a change to the overall system where I want to make sure that all 8 filters are passed before I put on a trade. And therefore, there's going to be less occurrences. And with less occurrences, I lowered the price to only $149 per month to follow. And last week, so 2 weeks ago, we didn't find anything. There wasn't anything that passed through all 8 filters. But then last week there was. It was Pepsi. And we made our 6% there. We hit profit, made $268. And that's not including fees. So my record overall is 15 wins, 5 losses, and 3 ties, and that pretty much brings me to almost a break even. You can see I started with $5,000, so I'm down about $100. So what is that? Down about 2% overall, but I'm feeling pretty good about going through all 8 filters. With going through all 8 filters, I'm currently 1-0. I could maybe go back and look and see which one of these went through all the filters, but I'm not sure if I have those records. So yeah, let me turn this off. So there's my earnings edge. We are currently 1-0 with the new kind of newer system where I make sure that I pass through all 8 filters. And let's go into the Premier level 5 real quick, do a quick update with that. So we started this one on April 8th. There's April 8th. Right about here. Market's down about 13, almost 13.5%. And we're up approximately, what is that number? About almost 1%. And this includes commissions and slippage. So it's doing pretty good. I mean, overall, we're up close to $800, but there's a lot of commissions and slippage involved. So we're up about $265. On this system, I made 6 trades with a couple of adjustments. And so I've been doing an average of about 1 trade every 10 days or so. My record is 3 wins, 0 losses, 1 tie. And I have 2 open trades right now. Probably going to add a 3rd trade today. And this has been the toughest environment for the Premier level 5, this grind down market. So what I like to do, or what I like to talk about, is if you can survive the grind down market, break even or make a little bit of money or even be down a little bit, as long as you're not, as long as your drawdowns aren't really high, like 13.5%, like the market, you don't have that much to recover. So when the market goes sideways or goes up or crashes, you're not that far off from making money, as opposed to if you're in the market, you've got another 13.5% to go just to break even. So that's one of the keys, is to keep those drawdowns really low, and that's what the PL5 does, and that's where we are with that, with the PL5. And that's the one I highly recommend. This is the best trade I've got. This is the one. This is the best one. Okay, let's get into the safe wheel. Oh, one thing that I forgot to say, be sure to post any questions you might have right now. That way we can make sure that I get to those and I don't end the live stream with your questions still out there, or you're trying to post your questions real quick. Okay, so let's talk about the safe wheel. And that would be, I believe it's this account. Yes. So with the safe wheel, I'm trading BAC. Last week we opened up our first trade with BAC, so we began the cycle, and you can tell when we begin the cycle because we bought the hedge at that time. So we bought our hedge last week. We sold, or I sold a put, and then I bought a long call, a little $5 call just to protect this. It looks like BAC, what did it do? So let's see, Friday, Thursday. So I think we got in, I don't know, it was around 31, and now it's around 31.55, so it didn't move too much. Not a lot of movement, but it did move higher, and we sold the put at a lower level, so we were not assigned. So not assigned means that we just collected that premium and we got to keep it. And of course, the long call did not come into play, or else I would have sold that long call out on Friday. So the question I have here now is, I want to make sure that my put, I have the $25 put, I want to make sure that that's not 70% or below the current price. So what is that? 31.56 times 70% is $22. I want to make sure that this put right here, it's a $25 strike. If it was a $22 strike, I would roll it up higher. I'd roll it up to 80% of the current price of BAC, at 31.57. But right now we are at that level. The $25 put is approximately 80% of this 31.59. So we don't need to adjust this hedge. It's close enough to the money. It's close enough. This $25 is close enough to the 31.50 to keep that hedge on. So now that we know our hedge is good, we're going to go ahead and start over. Basically, we're going to sell a put, and then we're going to buy a call to protect the hedge. So I'm going to make sure I'm on BAC. I'm going to go with the one that's 4 days out. So that's the one that expires on Friday. This is the expiration cycle where we do our trading. And I'm going to sell a put. Now I want to get at least 31 cents for the put, or 32 cents. So I could go here to the 31.50, but that's at the money. So I want to get as far out of the money as possible. So here, the $31 one, that's the one I'm going to sell. And I'm going to do one of those because that's the, I'm using a $5,000 account. If I had a $10,000 account, I'd do two of them. So I'm going to sell this 31. I'll try to get a little more. You never know. Because the mid price is 37, might get 38. Okay, so now we have our premium running about 37 bucks. We want to protect this hedge. So the way to do that is to stay in the same expiration cycle, buy something for around, if I can get this for 6, I would take it. Or I might have to go here for $4. So the 33.50, I would rather buy something closer because it gives me more protection. Let's see if I can get this for $6. I won't pay 7. Yeah, it's probably not going to fill. So I'm just going to cancel that order. And I'm going to have to go here. $4. Okay, so about that for $4. Okay, so now we have our position on. These expire at the end of the week. Brought in some premium, protected our hedge. Still have our hedge on. BAC's, doing the job. Got good tight markets. The bid-ask spread's really tight. Got enough premium to get out of the money. And we're around that $30 range. Okay. Let me just kind of do a little bit of calculations to see how we're doing overall. I always like to update every week, you know, how much money this particular system is up or down. It's up $1,149 because I started with 5,000 divided by 5,000. It's up about 23%. So that's doing quite well, much better than what I would expect. And I would not expect this to do 23% all the time. It averages about 10% on back tests. Okay, let me get to, so also on the safe wheel, if I have not gone over every scenario live, because that's, it's not really going to happen. It may or may not happen that I go over every possible scenario. So what I've done is I put together a flow chart. That's just a flow chart of every possible scenario. And I've made that available in the link in the description. And I've kept that price really low and I haven't raised that price yet. I always talk about raising that price, but I haven't done that yet. Okay. Next, let me get into answering some questions. Let's see if there's any questions. Walter, to what extent, if any, do you consider ex-dividend dates, probably not states, right? Dividend dates when pricing option premium or choosing underlying equities? I do not consider dividends at all with this, with the safe wheel. It's not even a factor. Don't even think about it, which is kind of nice. Let's see. Walter, good morning. Remember to tell the viewers to hit the subscribe and like button. Thanks, Walter. I appreciate that. I always forget to do that. Oma, hello. Let's see here what I have. Question. Why did you stop exposing traders? So I did an interview with David Jaffe last week, and he asked me that question. So I think it's better if that was kind of the long version, and it'd be better answered there. The short answer is he's kind of got bored. And I may do it again. It just depends on how it's just, if they're not showing their P&L, it's just kind of obvious to me. But I might do it again. I might do some more. Kevin from Lakeland, Florida. How you doing, Kevin? I'm the one who knocks. Where is Macy's? Macy's is $17.60. So last week I got out of the cycle, and because I got out of the cycle, it was time to start over. And when I looked to start over, Macy's did not qualify as a stock because it was under $20. If it's over $40 or under $20, I won't use it. Even though someone else mentioned that it was still viable, and that is possible that it is viable. But my back tests show that once I start getting under $20, I start running into problems with not getting enough premium. And so I just kind of keep it a general rule to be between $20 and $40. Even if Macy's would work under $20, I don't want to use it because I want to keep to the rules. And again, that goes back to the system works with any stock as long as it fits the criteria of being tight bid-ask spreads and it has enough premium that you can get the premium out of the money at 1%, and it's between $20 and $40. I can use any stock. I don't want to be tied to Macy's or anything like that. Jerry, if you want to do this with a $30,000 account, what would be the amount of puts sold and bought? So 30 divided by 5 is 6. So I would have done right here 6 of these and 6 of these and 18 of the puts, 18 of the hedge. Okay, Jerry, how do you feel about doing this with SPY when the market is calmer? I didn't do my back test that way. I did my back test based on a certain size of a $5,000 account, and the sizing led me to between a $20 and a $40 stock price. And I can use any stock as long as it meets the criteria. So I don't really need to use SPY or any other stock that people might like better than another. There's no reason to like one stock better than another here, as long as they fit the criteria. And so as far as the sizing, I did it this way. So this is the way that makes sense to me, and it's easier to size. So I would stick with these stocks that meet the criteria. Okay, one naked put per 5,000. Yeah, right. Charles, I like David Jaffe. Yeah, David Jaffe's a good guy. I believe he cares about his students, and I believe he's doing the right thing. He's not trying to steal anyone's money or cheat anybody out of anything, like a lot of these guys out here. Please post a link to Jaffe interview. Okay, let me make a note here. I'll put a link in the description. One thing I wanted to say before I forget, if anyone, I am totally open to anyone within the live stream making suggestions on new potential stocks, because I think that would really help. That if I had a good list of stocks that were in the $30 range, in case I got out of BAC and I wanted to look at a different stock, if you guys want to come up with stocks, that would probably be helpful, because there might be some stocks out there that I would miss that would fit for the safe wheel, and you guys know who they, you guys would know which stocks they are, and I might miss it. Charles, how did Macy's handle the recent drawdown? Oh, it did well. Watch last week's live stream, and you'll see that the hedge paid to get out of the strategy. So it did quite well. In fact, all of this 23% or 24% in this account is due to Macy's since the beginning of the year. So it's been 6 months. But recently it did well. The hedge covered everything, and that's when I got out. Omar, definitely the way you show P&L is genuine, and those who do not are not serious. Thank you. What are the exact filters you're using for the earnings edge? That is proprietary. And a lot of people within the earnings edge, because we have a Discord channel, they ask me that. That's kind of like the number one question. Is T a safe wheel candidate? Just off the top of my head, I don't know if there's enough premium, but I'll take a look at it. T is trading at $20, $21. So I want to get at least 20 cents out of the money. And I can't get it. There's not enough premium. Okay. But it was close. JD. Okay. You're talking about M, and you're talking to Charles. Okay. Let me you guys can have your conversations. Cool. Okay, let's talk about Will. Okay, here's a few. TWST. Let's see that one. TWST. Oops. Oh, I didn't press the wrong button there. Let's see. Okay. TWST. See, the bid-ask spreads are so wide, 30 cents to $3.50. So that is automatically eliminated. What was the other one? RBLX. RBLX. So it's not bad on the bid-ask spread. It's trading about $38. So can I get 38 cents? Yeah, this one might be a candidate. Not bad. RBLX. I'll write that down for future. Or actually, I'll add this here. That one's a possibility. RBLX. I'll put that in there. I'll probably get rid of all these things that are not it. I can do that later. Shop. I think we looked at Shop last week. I thought it was pretty good. It's relatively tight and trading around 33 bucks. What can I get out of the money? Definitely more than 33 cents. I do like that. I do like Shop. Let's put that in there as a potential that's potential stock in the future. That's good. Okay. Thanks for that, Will. I am the one who knocks. What are your thoughts on selling a straddle with a call and a put hedge? A straddle with a call. Well, selling a straddle, that's like a whole different trade structure. And if you get in certain markets like a grind down or a crash, selling straddles is really going to cost a lot. So it probably works really well in certain markets, but you hit those extreme markets and selling straddles, you get slammed. And I'm not sure if that was the exact question you had. You can ask that one a little bit differently if I didn't answer that the way if I didn't take that question in the way that you thought I would. Okay. I am, as long as they're legged into with price action, you can probably have an edge. I don't think there's an edge selling straddles again, because when you hit the extreme markets, you're going to take a huge loss and it's going to wipe out all your gains. That's what I've found. Okay, Jerry. When you had a drawdown, what was the amount of time in the drawdown? What situation causes a bigger drawdown? I think you're referring to the safe wheel. Typically when the stock goes up, but not all the way through your call, you have drawdowns, but in there's a link in the description of the back tests, and I think I talk about that in there, but that is all the data that I have. So you might be able to see some of the stats on that and see when I did draw down or how much I drew down, my average drawdown, things like that. So check the link in the description for a detailed answer on that. And then maybe next week come back if that video doesn't answer your question. I might be able to pull out the answer. And it might take me time to pull out the answer, so I might have to write it down and come back the following week. Okay, Charles, higher volatility symbol, higher premium, but also higher price action swings. Correct. So we're not too afraid of price action swings with the safe wheel. That's one of the advantages. All right. JD, other stocks. All right. I'm not doing those right now, but I can write those down. I'm going to write those down after, and I might add them to this list over here. This list, I'm going to try to clean this up and just be potential safe wheel here in this list. Walter, Para. I'll take a look at that. Charles, Beyond, Dow, DAL, CSX. I'll write all these down. Okay. All right, Charles, thanks. RBLX hedge is expensive. Yeah, I'll take a look at all that once I ever get into a situation where it's time to get a new stock. But the thing is, the hedge might be expensive, but the premium is nice. So the premium should make up for that for the hedge. And also remember, with this hedge, we don't take it all the way to expiration. So, we only use part of that hedge, so it depreciates slowly. Canva, CVNA, a meme stock. Yeah, I might try to make money off of meme stock. That'd be cool, right? All right. Whoops. Charles, price of the put should be proportional to the premium collected. Yeah, that's what I just talked about. Uma, what is a meme stock? Well, it's a stock that the Reddit people in Reddit got together and decided that they wanted to manipulate or move the stock up or down. I think up. And it was just like a crazy because a lot of hedge funds have it shorted because they think that it's just going to go out of business. And it's just like a company that's really not making money, not doing well. And the hedge funds are shorting it. And then the people on Reddit, the millions of people get together and they all buy it and they take out the hedge fund. And because the stock rises and rises and that hedge fund gets taken out and they lose all their money. And then the meme stock's just going crazy. It's just going from $100 to $400 back to $150, just moving like crazy. And it's not anywhere worth, $100 a share. It's worth like $4 a share. That's a meme stock. Okay, Charles. I'm going to have a diversified safe wheel. Yeah, so what's cool about safe wheel is it's already diversified without using different underlyings. You can just use the same underlying, and the way the system's set up, it's diversified. That's what I like about it. Okay. Thank you. You're welcome. And it looks like that is the last question. I'm going to wind down here unless there's anything else that anyone wants to ask. Okay, I'm going to go ahead and say, if the P&L is not real, what else are they trying to conceal? I'll see you guys next week.